Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, January 12th, 2017. And in this video, I want to take a look at the steel sector. I see some potential trading opportunities, some of which may be posted as trade ideas here soon. And I want to do the video with a brief overview of the sector itself, the steel industry, and then go over just a handful. I have a handful of picks for potential trade ideas, and I'll also include the ETF for those of you that prefer ETFs over individual stocks. So what we're looking at here is a chart of the steel sector on TC2000, the charting program I'm using. It's IX1130 is what they use for the steel sector. A couple lines I have. These are alternative downtrend lines, both which were taken out here back right around late in the year, around mid-November. And the steel sector has done very well since. So a couple things to note on this chart. Number one, we are at resistance. So let's draw this out here. Use a highlighting tool. You can see the resistance line that I've drawn here. There's numerous reactions at or very close to that line in the past. You can see prices punched above, and if you look closely, and keep in mind we are looking at a weekly chart. If I don't make mention, the time frame of the chart is up here in the upper left-hand corner in either of those spots. So we're looking at a weekly time frame which spans 10 years. So each of those candlesticks represents 1 week of trading action, and you can see once we got above that line, as is often the case, resistance once broken becomes support as it acted there. It was resistance from below. You can see some candlestick action around that level, and then a big old gap back here that helps to validate that line. So a fairly decent resistance level. We kissed it once recently and have pulled back. That this could be construed as flagging action with a breakout and a move a little higher. We'll see. Right now I'm viewing these as potential short-term pullback trades. In other words, swing trades that may last a few weeks, possibly a couple months. But I will present both sides of the case here, bullish and bearish. To firm up the bearish case, or at least the case for pullback, which I'm making now, you can look at these overbought readings. Overbought means a reading of over 70 on the RSI. That's the red line here. Again, this chart spans a decade, and as you can see, I've circled all the overbought readings in the past 10 years. We most recently became as overbought as we've been since over the last decade or so. You can see that was the highest reading right there. And let's clear out those annotations and just kind of give you a visual here. You know, if you look at what happened from that point, I'll use a circle tool. Here was that overbought reading back there in 2008. This second one right here, I believe, was that next overbought reading. You had a cluster of overbought readings right here. And what I'm getting at is just take a look at the price action following those overbought readings. This is what I'm getting at. Again, that's what trading is all about, what technical analysis is about, looking at past patterns to try to predict the future direction of a stock or a ETF or a industry or market, whatever we're looking at. And that so far supports the case. So once again, we have the steel stocks at resistance, coming off the most overbought readings that they've been at in the last decade. And I think hard to measure it out here. I'll have to change boards, but this looks about the shallowest pullback that we've had from an overbought reading back here. And that was still good for a drop of about almost 20% in the sector. So again, on a weekly chart, I use log scaling. It may not look like much, but those are pretty big rips and dips on the steel index. So let's look at a daily chart. Oh, one other thing I mentioned to really, I told you I'd cover both sides, bullish and bearish. Back here was at the lows, we had what could have been construed as a head and shoulders pattern. The symmetry, the length of the shoulders was a little bit weak for me, but let me draw that out so you see what I'm talking about. So we had a potential left shoulder here, again, very shallow. This would be your head right there, right shoulder, and then this would be your neckline there. So this is a potential inverse head and shoulders bottoming pattern. Inverse head and shoulders always are bottoming patterns. They're reversal patterns after an extended downtrend. And the general rule of thumb is if you take the distance of the the distance from the bottom of the head to the neckline, and you add that to where prices broke out. That gives you your measured target. So again, this may be flagging action. We may bust up here, but the trading is all about if we see some objective setups, which I'll get to here in a second on some individual stocks in the steel ETF. Look like some bearish setups. We can take a short sell signal on those if they trigger, and if wrong, we have stops not too far above. So then that quantifies or minimizes our and both quantifies and minimizes our loss if wrong. But I think the potential's there. I think it's worth doing the video. So let's get into these individual stocks. Before we leave the steel index, let's take a look at the daily chart here. A couple things to note. So you have several trend lines. What we have here is really a series of rising wedge patterns. We had a rising wedge right here back in 2016. You can see the rising wedge. You can see the negative divergence confirming it. And then we broke down and had a relatively minor correction at that point. So let's erase that. Now fast forward, we've come full circle. What's happened since then? The divergences from that point where these divergences began have extended. So you can see the PPO down here I'm using in lieu of a MACD. That has put in a lower high, and the RSI looks like it put in a roughly equal high. And you can see a trend line right here that we're watching. So this is a wedge. Now this wedge could continue to work its way a little higher. But there is some horizontal support here, and this is what I'll focus on when I get to the individual stocks here in a second. So if that breaks, that could take us back down. And remember, as I just mentioned above on a minute ago on the weekly chart, we are at or recently coming off the most overbought conditions we have been. This is a heck of a run up in the steel stocks. So it wouldn't surprise me in the least to see this trend line break and to have us come all the way back down here to about the 14, looks about the 1475 area. And that again, I'm looking at the sector itself. That includes the good and the bad stocks within that sector. That'd be about a 22% drop. So something worth taking note of here. Here's another view of the steel sector. This is the steel index. I just typed in the symbol STEEL. Same story, obviously, I just went over. There was that earlier bearish rising wedge, the subsequent correction. We had a little false breakdown there. And again, another divergent high, as you can see here with the white lines. This most recent high was a divergent high. So there's an alternative trend line to watch. You can see the support and some support down here. Let's see if I have anything drawn on the weekly. No, I don't there. All right, let's dive into the charts. I'll only go over a handful of stocks, keep this video relatively brief. These are some of the stocks that stand out to me. This one, first one is symbol MT, and this one appears to be working its way up within a bearish rising wedge, which may or may not have more to go. There's quite a bit. The wedge isn't contracting very steeply. It's almost it's not a channel, it is more of a wedge pattern, but the most important thing is that you have negative divergence. So you have prices moving higher while the price and momentum indicators and oscillators are not keeping up. It's about even there on the RSI, overbought reading as well, but definitely negative divergence on the PPO. Most importantly, and this is how you trade, you set an alert. If we have a trend line break, there is a pretty well-defined trend line, so I'll go ahead and set an alert right there. All the levels down below are potential targets. I really haven't marked this chart up too much on the daily time frame. Let's see if I have anything on the weekly for you. There it is. Okay, so what we have here is a pretty well-defined downtrend line. You can see numerous reactions. 1, 2, series of, we'll call that 3, that's a cluster, and then multiple weeks, actually about a year of testing that downtrend line. And once again, we ran into that downtrend line and we pulled back. So we have, again, a stock long-term resistance, long-term downtrend line resistance, some decent horizontal or price resistance, not too far above it. If it happens to punch out through there, maybe have a fake breakout, false breakout, and fall back down. And then, as I just showed you on the daily chart, and you can see it here on the weekly, we have an uptrend line. So this would be our sell signal. In trading, you can sometimes get ahead of a trade if you anticipate a breakdown. Put a short here with a stop on a weekly close above the downtrend line, or maybe above this horizontal resistance level not too far above. Or the more conventional and a higher probability entry is to wait for a breakdown of that trend line, which again I also covered on the daily chart. fairly well defined. Pros and cons, well, if you short at resistance before a trend line break, you have a higher entry price on your short trade. In other words, a more favorable entry. While if you wait for confirmation on a breakdown of that trend line, your entry price will be a little bit lower, but you have usually a higher percent or higher probability of that trade playing out successfully. 60-minute chart I did not have marked up. Next one on up is STLD. I flipped back to a daily time frame here. What you can see is similar to the steel sector. And as I often say, birds of a feather flock together. So a lot, not all, but a lot of these charts will look very similar. STLD, Steel Dynamics, had this wedge pattern. And here's a case of a wedge that broke down well before it even got close to the apex. Broke down, played out for a decent correction. I'm going to try to give you a rough estimate of that. That pullback was about 20%. So well worth trading from the divergent high, that is, not from the breakdown of the wedge. And fast forward, we've had a heck of a run up. And this is a very steep, it looks very small, but this is a divergent high on the daily time frame, and I do like to see that. It also looks a bit like a possible buying climax here in the stock. So you have negative divergence, extremely overbought. Look at that level. We were up around above the 90 level on the daily RSI. So those are rarely overbought. Rarely seen overbought levels. It is sitting on a support shelf. It has pretty good support here around 35.60 or so. And although I see a little bit of support there around the 34.25 level, I believe if that one breaks down, it'll at least visit and test the top of this big gap back here. And that's a drop of, what is that? 14%. And if it goes on to backfill the gap, then you're looking at a drop of about 20%. Zoom down to the 60-minute chart, and we can see that divergence a little bit better that I just drew on the daily chart. It shows better down here. Fairly well-defined uptrend line. We broke down. Now this looks a lot like the broad market. I put up a post this morning showing the SPY, QQQ, IWM. IWM, for example, as well as the SPY, and particularly IWM, had a similar pattern. It had a rising wedge working its way up into the end of the year, broke down recently, and has traded sideways. So this market doesn't know what it wants to do. And I shared my thoughts. I think the next break is to the downside. Take it for what it's worth. It can go either way, but that's what, again, trading's all about. I may be wrong, but I believe this is a very objective short entry. If you short it under on a solid or impulsive break under this support level, it's around 35, 34. Again, if I will put some of these most likely as official trade ideas, in which case I'll give you explicit entry points, price targets, etc. But you can see these are the rough targets: 33.84. And as I mentioned a minute ago on the daily chart, I think there's a good chance we come in at very least test the the top of that gap around 30.75 and may backfill the gap. So there it is, a rising wedge that has broken down, and like a lot of other stocks right now are sort of in a holding pattern, waiting to see which way this market blinks. I jumped over to the next one. I was on the 60-minute time frame, so we'll just start there on this stock. This is GGB. This is a foreign company. When you see ADS, that's American Depository Shares. That's a company that's outside the U.S., and they have shares listed on this market. So what you see is a rising wedge, pretty clean, with divergence, negative divergence in place on the 60-minute chart. Let's see what I have on the daily. Okay, a lot of trend lines here, but the most important ones to focus on, I'll use that magenta. It stands out. From this point to this point, you see the stock making a higher high, with the PPO making a lower high, RSI making a lower high at this point. You could draw it like that, if you will. So there's a divergent high, clear negative divergence. You also have a fairly well-defined trend line, which has broke at this point, back tested right here, just as it broke down there. So my expectation for this stock, this is a back test. This is pretty much an objective entry at this point from the daily chart. That back test is successful, meaning the stock is rejected off the back test of that trend line. My expectation would be a move down to the $3 level. Doesn't sound like much, but it's at $4.02 right now. So you're talking a drop of roughly 25%. So a lot of meat on the bone on that one. Weekly chart, and there it is from a weekly view. Like I said, I really like to confirm my trades on various time frames, going all the way out from the weekly to the 60-minute charts. Because if I have some conflicting information, if a 60-minute chart is bullish but yet the daily chart is bearish, then I might step aside. But in this case, I can make a case that both the steel sector and this individual stock are very close to this long-term, this is a 10-year chart, and that's a long-term downtrend line with numerous reactions, which helps to validate that trend line. And you also have this uptrend line that you can look at there. Moving on to the next one, this is symbol X, which is U.S. Steel Corp. This one I've had over the years a lot of success, some pretty big trades, pretty big gainers on this one. These steel stocks can really move. That's why I like to trade those, and really haven't engaged the steel sector in a while. Forget about all these past lines and annotation. These were old. It must have been an old trade, old targets. Divergent low back here, rising wedge. Downtrend line, which was broken, that was bullish, very oversold at that time. And I may have had a trade earlier in the year, or last year I should say, in 2016. I can't recall, maybe even in late 2015. But either way, since then, what we're looking at, you have an uptrend line here, fairly well defined. It broke down in a high level back test. It was a pretty steep uptrend line. Looked like we back tested. Each of these lines are this was a target, which was a resistance level back then, and we fell just shy of it so far. Now, zooming in, it may be flagging. That could be a possible bull flag. We'll see, but let's zoom down to the daily charts now, take a look. I see, and I haven't drawn it out here, like a lot of these steel stocks I'm looking at, they, as I mentioned, broke down from a bullish rising wedge recently and have been moving sideways since. My apologies because I didn't have this chart marked all the way up, but there's negative divergence if you draw it from the most recent high down there. Again, very similar to the other steel sectors. We had this wedge, these wedges that broke down early for a nice correction, 20% or so in most of the other stocks as well as the sector, ran back up on that recent ramp. And let's see what I have on the 60-minute chart for you. Yep, there it is, same story. Bearish rising wedge, breakdown, like everything else or most other stocks, especially in the steel industry. We've traded sideways. This is looks like the support level here, give or take a few pennies, around 32.84. So a break at that level would trigger a sell signal that would take us down to any or all of these levels. And I do favor, as with some of those other stocks that I talked about, a backfill of this large gap here. So that would take us all the way down in time. And when I say in time, there's usually reactions along the way at each of these targets or support levels. Work our way down to 23.74. And as always, if it's an official trade, I will set the price targets above the actual support level to help avoid missing a fill. Sometimes stocks will reverse just shy of the actual support level. So that should be, if it's like the others, a 20%. Well, that one's actually a little more, about 28% if that one, and that's just that's if the stock only comes in to test the top of that big gap. If a gap fills it, backfills it, I'm sorry, that would be a little bit more, but 28% drop if we get down to that target level. So again, if we're wrong and these stocks are bull flagging and they break out, each trade is different, but you can set a stop above the recent highs. I also see a fairly decent resistance level here. Again, we've had this trading range that I just highlighted, so a definitive or impulsive upside break would be bullish, and that would be a reason to stop out. And a downside break would obviously be bearish, and that would be our sell signal. So there's X. A couple more left to go. AKS. This is AK Steel holding. We're on a 60-minute time frame. If this chart ever loads, there it goes. Bearish rising wedge, negative divergence, same story. Again, as I mentioned, birds of a feather flock together, so a lot of these stocks trade in tandem, almost in lockstep, it appears. These charts are very similar. This one I put an alternative. You can see this uptrend line here, the white slightly upsloping uptrend line. That's been broken, pretty impulsive, big move. Stock's down 11% today, and this is a support level I'm watching, 975. And if I haven't done so, I'll set an alert on that. This one will probably be an official trade idea. These targets, I've already started to mark this chart up. And I've adjusted these. As you can see, that line's at, I'll put it over here so you can see it, 827. So I have my Buy to cover order would be a little bit above that. If I decide to cover at T1, assuming I take the trade, assuming it triggers an entry. 771 is that next support level, so it targets at 774. And there's that potential third target, which once again is right above that big old gap that I'm looking to see tested from, at least from above. So there's AKS, daily time frame. Pretty nice chart. Same story. Divergent high. We had that breakdown earlier in the year. Another divergent high, as you can see there. And anything on the weekly to show you? Yeah, stocks at long-term resistance. I'll draw that out here. Hit that long-term resistance level, and again, a weekly chart now, a 10-year weekly chart. So it looks like several weeks or a couple months we've been stalling out at that resistance level. There's a reaction back in late 2014, a reaction from above, and some reactions back here. So a stock at long-term resistance while extremely overbought. As you can see here, the only time the stock has been this overbought was back in late 2013. At this point, we corrected. There was another overbought reading. So you can see these corrections that come after these overbought readings. Here we go back, overbought right here. That's it. So a lot of technical evidence lining up for at least a swing trade, pullback short trade on these stocks, and possibly more. WOR, I was on a weekly, so I'll just start with the weekly chart. Here's an uptrend line to watch. It's not drawn out here, but there's a big old divergent high. Long term, no, not so much, because that's actually making a higher high in the PPO. So scratch what I just said. You don't always have to have a divergent high. It is something I look for. But we do have some extreme overbought readings. As you can see, last time we were overbought was over here. Huge correction after that. We became overbought most recently, and we were overbought back here. Big old drop back there. Let's look at the daily chart. It speaks a little more clearly. We have an ascending price channel, and the stock has recently broken down below that price channel. So that may be a sell signal. I'd have to study this one a little further. Not one of my favorites, but there's something to look at. So I see a little support below, so I wouldn't jump the gun yet. Plus that breakdown, we haven't really seen impulsive selling, and there's only a few reactions so far on that channel. So it's one I'm watching. Definitely, I think if the sector drops, I think this one goes down along with it. And I can see easily a target down here around that $39 level, and the stock's at 46.68 today. So there's another potential one. Not much. I haven't marked anything up on the 60-minute chart. Okay, now next one, two more to go. FRD. If this is, it looks like Friedman Industries. Very steep ramp. We go back here to this 2-day period chart. You can see there's a long-term downtrend line that goes to the left of that chart. So it broke out recently. It's had a heck of a run. That was bullish at the time. I wish I would have caught that on the long side, but I didn't. With that being said, the stock is now very overbought, and I think there's some things. Yeah, here we go on the 60-minute chart. We can see the stock working its way up within this wedge, negative divergence. This isn't my favorite. From the look of these candlesticks that look in the volume bars below, that's a thinly traded stock. So again, not one of my favorites, but one that I did want to mention for those interested, because I think if this wedge or this uptrend line breaks, this one will head down to 640, maybe reaction there, and possibly work its way down to 573 in time. And just to wrap it up, this one, again, not one of my favorites. Will not be an official trade idea because it's a penny stock. It's only 13 cents a share. But as I say, there's sometimes a stock in a bearish sector that looks bullish. GSIH, General Steel Holdings, it may be heading to bankruptcy. Usually when you see a stock drop from $7 down to 13 cents, that's the path it's headed, but there is bullish divergence in place, pretty clear bullish divergence. And so you could set a price alert here for a break above this trend line. Let's do that now, set alert. And that one could be good for nothing else. Sometimes you get, even if the stock is headed to bankruptcyville, you can get a short squeeze at any point in time, and these low price stocks are powerful during short squeezes, so that one could run up to 30 or even almost 40 cents on a break of that trend line. So just wanted to give you guys one for somebody that either doesn't like to short or prefers or is looking maybe to hedge, take a hedge in the sector and have some long exposure. I'll wrap up the video because I didn't mention this, and I did promise to talk about the an ETF. This is the Van X Vectors Steel ETF. There you can see a very large rising wedge pattern, negative divergence as I talked about before. Of course, this will mirror the sector closely. There's an uptrend line which to short if you decide to take the ETF. I don't have all the levels marked right now, but if things get pretty ugly in the sector, I could easily see it coming down here to this 32.85 level. And if I do put up some individual steel stocks and don't put the ETF up and don't follow up on that, and you are interested, by all means, if you're a member of the site, drop me a line, preferably in the trading room for others to see, and I'll be glad to put up a chart with my thoughts and price targets. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.